The cracks, I think, are starting to show for the policymakers. And, we've talked about crypto markets in the past. It's all about liquidity. We need money in the system. Mm-hmm. Part of that is interest rates. And everyone's been hoping and praying for rate drops since the end of last year, really. And I think it's been a bit of a shock to the system for a lot of people towards the middle of, the first half of this year, Q1 into Q2, where there were promises of rate drops but no delivery. There was always the same rhetoric on jobs are looking good and inflation was too high. Well, for the last few months, we've seen inflation kind of stay steady. But we actually saw last week, Friday, the jobs market start to slide a little bit too. Pretty concerning. But I think the big one this week will be there is some testimonies being done by Fed Chair Jerome Powell with the Banking Senate Committee, where if they do quiz him and drill him about, well, how can you possibly say that the rates are where they should be when jobs are falling off a cliff, I think he's going to have to come up with some pretty captivating answers. Mm-hmm. But I think everyone will be waiting for, if you're watching that and boring like me, for him to sort of give some sort of hand of where things could be going. But if we look at this chart, even that I'm showing right now, this is available on the CME Group website. It's called the FedWatch tool. Basically aggregates the probabilities that the market is putting towards rate drops at these particular meetings throughout the year. And the September meeting's been one of interest for me. If you follow the green squiggly line, that's basically the market putting its probabilities of rate drops occurring in September. And this has taken a marked increase since that announcement that I just mentioned at the end of last week. And the percentage chance that the market sees for rates staying the same has absolutely plummeted. So this was basically in no man's land, sitting around people. There's basically people sitting on the fence for months and months and months. And it's only in recent times it's really started to turn. So I think it's still a bit early to know 100% what's happening. But, we're seeing the stock market continue to put in new fresh highs. Mm-hmm. Crypto market's definitely at a point of apathy. And like you sort of said, we have seen, powers outside of anyone's control, like the German government, for example. This is a dashboard that you can make on the Arkham Intelligence website, an on-chain data visualizer. But it shows just their movements on-chain for a wallet that's been linked to that entity. So it's gone from 50,000 Bitcoin to just successive selling through exchanges, where it now sits at 40,000 Bitcoin. And they're basically a fifth of the way through potentially selling down their whole stack. Or maybe they're going to keep some. We don't really know.
Well, that's been the narrative this week, right? Or this past week has been the Mt. Gox selling off, which I don't think has even started yet, but in anticipation of that. So a bit of sell pressure there. So and then also German government basically having seized Bitcoin and then sending it to exchanges to sell off to basically cash in or cover themselves. Doesn't look like they're going to sell it all off. They might hold on to some because they think it could be going up. That's purely speculation on my end, but that's sort of driving this recent pullback.
It's a lot of spot. It's a lot of spot entering the market, but again, it is a drop in the ocean when you think about 35 bill is traded on any given day for Bitcoin, even when it's quiet. But it still affects sentiment. Most people out there, they're seeing this, they don't know what to make of it, so they're just selling as a protective measure potentially. But it's taken this much news to get Bitcoin to where it is today. But if we measure from the highs, it's still down like 27, 25, 26%. So pretty much in the ballpark of what we've seen in prior retracements. And for me, I'm just liking what I'm seeing at these range lows. I think if we can continue just to consolidate here, even technically speaking, should offer hopefully some relief rallies across the board. So I'm excited. And I know you've been following some macro too these days, Ted.
Mate, well, sometimes when you're off the podcast, I have to fill your shoes when it comes to the macro. So I'm starting to get into it a little bit, despite how boring it is. But look, I was looking at the M2 metric, which is basically a metric of all the money supply.
Liquid money supply.
And this is basically the percentage change month on month. And we've seen 3 months in a row of positive percentage change in the M2. Looking at this chart for those that are just listening on, wherever you get your podcasts, that's really big because we've, for the last sort of, I guess since the end of 2022, so about a year and a half, we've just seen negative month-on-month changes in this M2 supply. So the fact that we're seeing positive growth in that realm is massive. And like you see that massive spike in 2020 when they just injected liquidity into the market around the COVID sort of time. So, and that's when crypto markets went crazy, right? So we've always talked about liquidity is what is required now to send markets to the next level, because people need, additional funds to be able to put into risk on assets, as we call crypto, and also tech stocks and things like that. So it's not these huge spikes that we're seeing now as compared to 2020, but it's still positive as it is, positive month-on-month growth.
Yeah, this is huge. Following this, I think, is a very just basic way of understanding what's happening in the world. And yeah, we're seeing now a phase where we've stopped pulling money out and putting money back in, I guess. And that's just the way the world goes.
That's it. And from my perspective, looking at the market over the last couple of weeks is like everyone's focused on the short-term pain. Like there's so much about the narrative of Mt. Gox and also the German government selling off a fifth of their Bitcoin. But like you said, there's way more people actually buying Bitcoin on a day-to-day basis. It's more just the sentiment around these things. Like, they're selling off. That means Bitcoin's going to zero. That's not the case. I like to take the longer term approach of looking at all the things that are happening, sort of in the next 6 to 12 months, and also the things that have happened, previously. Like we've seen with the Bitcoin ETF getting approved, that was huge for the market. We saw new all-time highs. We're now going to see the ETH ETF likely get approved and start trading sometime in July.
Correct.
It's an election year. We always talk about election years.
The back end of the year.
Yeah, back end of the year, often resulting in more liquidity and being injected into the market, and markets performing quite well across the board. And then also, we're seeing a political shift in crypto, mainly in the US, because that is the main market we look at, because it's, it's sort of the center of all things that we focus on. And Trump's had a shift and basically has come out and said he's the crypto president in more words or less. And then Biden's also, kind of shifted his stance on it to be a little bit more crypto positive. So all in all, I think these things will outweigh these short-term gain, short-term pain. But it just takes time,
And just with the short-term pain point, even when we go back to basics and we look at, people that we want to see buying Bitcoin, like the Bitcoin ETFs, there's entities, they've since Friday, even when we're having those massive sell-offs, we've seen positive net flows. So that's huge. So I think, again, the wind isn't blowing in the right direction for me. I think we could still go lower, absolutely, but I think the majority of the selling, unless something completely out of the blue comes through and whacks everything down, I think we have seen it, personally speaking. So we'll see how we go.
Yeah, absolutely.